Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Tuesday morning, we're coming to you live from the CNBC TV 18 Motilal Oswal studios. Overnight, quiet. Yesterday's session, good bounce from the day's low. Can we build on some of this into today's session? Tomorrow, remember, is a market holiday, so that's an additional factor at play if you're trading. I'm Prashant. With me, my colleagues Mangalam and Nigel. Guys, hi. Morning.
Hi. It's good, right? Tomorrow's a holiday and today is the expiry. Yesterday, the market was absolutely flat. Let's see where it goes. We have a bit of a 200 points sort of range, I guess.
Well, that's right. It appears we're in a bit of a range, but let's see whether or not we can break out for there. And we just got 10 more days of earnings in this particular season. So that's another countdown that's begun.
And looks like so far they're tracking slightly better than expectations. There's no at a headline level, no disappointment.
Not as weak as expected.
But it's important to also see, whether there are any more cues left from a global standpoint as well, apart from, the US-China or US-India trade deal or trade negotiations, as you say, because big earnings are out of the way for both India as well as the US. Today you have SBI. Barring that, I don't know if there is any big market-moving earning which is left, globally, I guess.
I don't know. I'm not sure about earnings, Mangalam, but I think I think it's the 5th. Today is the 4th.
Yes.
I think tomorrow the US Supreme Court starts to hear. That case against tariffs.
Yes.
Good that we are on a holiday tomorrow then. Yes.
No, so there's no timeline as to by when they need to rule. But for example, if they say that it's all illegal, all the collected tariff revenue has to be returned. Has to be returned. They're going to send the money back. So we'll see. But it's anyone's guess how this turns out. But I mean, the court will hear it. Okay, let's just quickly start from the top in terms of the overnight session, etc. Quiet, not very much by way of change. S&P 0.17, Nasdaq 0.46. So up, but up small. And of course, AI deals. It's like looking like one big jumbo circular one company buying from another and that company buying from somebody else, applying this. One big circular juggernaut so far. Amazon up 4%. It signed a $38 billion deal to supply OpenAI with NVIDIA chips. So, there's 3 companies there. OpenAI, NVIDIA, Amazon, right? And that's essentially what I'm talking about. It's getting complicated. I mean, who's dependent on who's buying from who, and of course, who's the intermediary between two parties, like in this case. You got ISM print out of the US, which was weak. By the way, it's the 8th straight month of contraction here. We're in a data blackout zone otherwise because of the government shutdown, which, by the way, I think if the shutdown remains for another day, actually 2 days, it's going to be the longest shutdown ever. Government shutdown in the US. I know that is really bothering markets in a big way. The 10-year yield was up about 2 basis points, 4.1. About the shutdown, Democratic senators urged President Trump to get involved directly in talks to end the shutdown. And of course, Trump basically shot back saying he won't be extorted by Democrats. I'll just leave you with levels straight away. So we've ended about 100 points off the lows yesterday. So there is interest at lower levels and buy the dip kind of sentiment, which is there. So we need to first get back to the 26,100 levels, which is not very far, about 1.5%. Support is 25,700, which is the lower end of this particular range that we've been working with. Bank Nifty needs to cross the high of 58,577. And of course, here support stands at about 57,656. So still in a bit of a range. Lots of interest, lots of money coming into the market. At the same time, it's being met by lots of supply in the primary market as well. So that's where we are at. Another big issue which opens for subscription is the largest discount broker, Grow. And we'll talk more about that as the day goes on. So that's where we are at. F&O positioning and the overall stats there. Nigel has walked across with exactly that. Nigel, over to you.
Well, yesterday was a good trading session, but follow through on an expiry day is going to be important. Today is the weekly expiry. So the last hour of trade, you'll have a bit of a move. And SBI, that's going to be the big mover. for the last hour of trade itself because it comes out with its set of numbers. What's been a little bit uncomfortable in the last few days is the FIs have been selling. Yesterday, they didn't sell that much, but 1,800 crores is what they sold. I'm not saying that much because in the previous trading sessions, you saw a higher net sell number. You'll want this number to actually come down, diminish, and try to get into the positive trend. DIs continue to show us the money. What about the F&O positioning? Well, on index futures, they went ahead and they added short position, 6,500 contracts. They remain net short, but close to around 84% of their positions on the short side. And if you look at the absolute positioning, FIs have added short positions, in the last few trading sessions. From the start of the series, effectively, that's 4-5 trading sessions. It's moved up by close to around 25%. So FI short positions were a little under a lakh. That's moved to around 1,25,000 contracts on the short side. Similar with clients. They were long, but their long positioning as well has got added by close to around 25%. So both of them, have added onto their respective positioning on the long as well as on the short side. On the stock futures, there were some shorts that were added, but that's normally a play between the cash as well as the stock futures positioning. But yesterday was interesting to see that the call writers, there were a lot of calls that were written, and that's why the PCR had dipped. Some of those call writers, they had packed their bags, because today you have the weekly expiry that's playing out, and there were some signs of put writing that we saw in yesterday's trading session. Now, the PCR, it had moved to around 0.62 yesterday. It ended close to around 0.8, 0.78, 0.8 or thereabouts. So it's still closer to the lower end of the range, you'll have to say. And two strikes were very active, 25,750 call, 25,700 calls. So there was some kind of resistance that's going to be seen at higher levels. Just punching in the premiums that you're seeing, on both these two strikes, you'll get a level just for the day. The 25,900 mark, that's a crucial resistance mark. Going by the options data, the 25,875 and 25,900, that's a bit of a resistance zone. While the 20 DMA is closer to yesterday's low, so this 25,570, that's a support zone that you're looking at. I pointed out yesterday morning that, in fact, the Nifty Bank was making lower lows every day. Yesterday, at least, it broke the trend. It made a higher, the lows of the day were higher than the previous trading session. And if you're looking at levels on this one, well, two levels you're looking at. The all-time highs, that's around 500 points away on the upside. So you keep an eye out on that one. And there has been repeated support added around this 57,500 odd mark. So you'll count on this level, holding out as well. The index that could be in focus will be the tech index. Yes, it's been a big underperformer. The Nasdaq is holding strong. You have deals that are being announced on the, on the global scale. Let's see whether or not the tech index can get its act together. Yesterday as well, under the weather, the IT index is something that I'll be tracking even for today.
All right, Nigel, thanks a lot for that. So that's the IT index that we'll be tracking today. It is weekly options expiry, the first one for the November series. Let's get you an equity call. Sanjeev Prasad of Kosdaq Institutional Equity says that the second quarter FY26 earnings season shows subdued trends in mass consumption items, but an uptick in select discretionary segments as well. Modest IT services demand and moderate loan growth for banks. Nonetheless, he adds that aggregate earnings are ahead of their estimates, with metals and mining along with oil marketing companies driving the beat in the Kosdaq Institutional Universe earnings print. He says they increase the weight on Reliance by 100 basis points to just sub 10% and on L&T by 70 basis points to 2.7% and remove Hindalco from their model portfolio.